Well, hi everyone, and welcome to the EcoInvestment update for the first day of spring, March 20th, 2016. Are you excited? I am. I always feel like this rush of real happiness when springtime comes. I know we've had a lot of rain here in Northern California. We needed it, but we got it. We don't need it anymore, but we're continuing to get it here. So, well, par for the course here and par for winter. But it is springtime, and happy Easter and Passover and assorted other seasons to you guys out there. Let's get down to it. The EcoInvestment update for March 20th. One of the theses that I originally ran with, and whenever you're doing investment, you should always put a working thesis together of why you think that things are working in the way that they're working and what you expect them to be. And the thesis for me was that the only thing that's going to kill this uptrend that's been underway since basically 1982, this bull market, the only thing that's going to really kill this is rising interest rates. And that working theory of mine was in place for a lot of years, and it carried over to the first year of this channel, the first 2 years where I was doing EcoInvestment updates. Also on the channel that preceded this one, the Rosie Murphy channel. And that thesis held me in great stead. It took me through a lot of wild and woolly times until we came to the summer when the market started exhibiting some real weakness to it. And of course at that time the question was, is this the end of the bull market, or is this really just a correction in a bull market? Well, I took that opportunity to stand aside. Bottom sort of fell out of the market. We came back up again. We did not make a new high on the Dow Jones Industrial Average. And then lo and behold, and after Christmas, I saw the market crumble again into January, and I thought to myself, well, this could be it on the downside. Here we go. But the reality is that when that market went down, and that Dow Jones Industrial Average went down in January, and did not break below, in February, break below appreciably that low of summertime, and close with a lot of volume on the downside and a lot of selling, it gave the first indication that this market is in a stronger technical condition, and it was a cue to me to get aboard, which I did about a month ago, and we've been riding it up ever since. So where are we going here? The thing you have to figure out is, are we still in the same bull market, or are we in just a really strong bear market rally? Well, I can tell you the parameters that are working for me. You know, having been along the market for about a month now and riding it up from about the 15,800 level, gone up about 1,500 points since I've been aboard. You know, we want to watch things very closely, but it's now looking like that original thesis about rising interest rates are the only thing that's going to kill this bull market are in place. It doesn't matter what the rest of the economy is doing. It doesn't really matter if some parts are really crappy and some parts are okay. You know, retailing's a disaster, and certain parts of the economy are still struggling, and it's hard for families to make ends meet, and the cost of things is rising, but not in ways that are measured meaningfully by the government. The question is, does a market have the ability to look past those problems, world problems of slowing economies? And the answer, of course, is yes. Because the markets are self-contained phenomena. And it does not matter what's going on the outside sometimes. As long as the monetary conditions are right, which they are now, for a rising stock market, then it will probably continue to reassert itself until such time as rising interest rates, 2, 3, 4, Federal Reserve, 5, 6 interest rate rises, start to give competition that pulls money flow away from the market. So we've come full circle. And we're once again established in the market, riding this up tentatively with one eye on an economy that's, well, none too well behaved, and then the other eye on a stock market that history tells me, and markets in general, that can easily be a bubble due to a flood of market liquidity and Fed easings and things that are generating a potential monster here in the way of a final blow-off for the market. So that's why this is what I'm plugged into now. And the only way I'm going to really fully confirm my theory of that the rising interest rates are the thing that's going to kill the bull market is when the interest rates, when the market goes past the old all-time high on the Dow of 18,400 or whatever. At that point, I'll say yes. Now I'm more certain than ever that only rising interest rates are going to kill this market. So we're still in kind of this la-la land, which is why, you know, we went from the eye of the hurricane to, there's something a little more going on here. We're going to buy into it, but we're going to be very tentative. To now, well, maybe we're not in the eye of the hurricane. Maybe that storm is past, and we're going to be rising on New Year. So it's very interesting times. What does the raging bull market look like? How many Americans today even know or are alive to tell it? Does it dominate the conversations of people around the dinner table? No. Is the proverbial shoe shine boy talking about tips in the stock market? No. No way. Does anybody really care about the stock market? No. In my mind, psychologically, this gives a lot of room for this market to run. As I once again switch my thinking around now, consider a market that could run on the upside, regardless of what the economic conditions are around it. So I'm going to continue to stay in this until either the bottom drops out again, and I'll have some clues that we're in for another sharp break here and move aside, but I will make them public as I always do my moves on here. Otherwise, I'm sticking a board now to see what happens because I want to see how it all plays out, and I want to see if my original working thesis turns out to have been the ultimate correct path to take here. So it's going to be very interesting. In the meantime, enjoy spring, everyone. Lots of good times coming up. Summertime, springtime, families, Easter, Passover. Enjoy. Be well, everybody, and stay tuned. Some people have asked me what sectors in the market. I'll never talk about individual stocks, but the airline sector is looking interesting. To me, the conditions for great profitability are there. And these are stocks that have not gotten a lot of upside play because people always worry that the rug's going to be pulled out from under them with fuel costs and things like that. But what if people start to get the inkling that fuel costs are going to be low for a long time? You'll have more and more people nibbling at that sector of the market. So stay tuned, okay? Lots of good stuff coming. I still love the metals. They're still being accumulated in here. They're the barometer of stuff going on, but they're quietly holding their ground. They're not giving anything up. So they're telling one tale while the stock market's telling another. It's interesting times we live in. Okay. Thanks for watching, everyone, and see you next week for Easter. Thanks, everyone.